Hello. I want to thank you for watching this video and for setting up an appointment with me or going to set up an appointment with me. What I'm doing is I'm working with a lot of business owners and helping them to set up a plan where they can have uh, a program set up to have a retirement income that is tax free, and they can also use the same program at any time they want to pull cash out of it to help with business expenses, to buy equipment or whatever they need the money for their business. Now, let's just get started here. And sometimes I'm a little slow because I'm dealing with a medical issue. I'm dealing with cancer, but I'm still out there working, and God is really working with me and helping me with my cancer. So I am trying to help as many business owners, many couples, and people as I possibly can. So let me just get started here, and I want to share my screen with you so that you can see some of the information that I'm talking about. Now, this is going to be an educational situation. And, you know, uh, what I'd like to do is I would like for you to keep an open mind and listen. Some of this stuff you may not know about, some of it you may not have heard before, but this is something that has been used for a long time with individuals, companies, corporations, banks, and uh, a lot of different folks. And watch this video to the end. And then if you haven't set up an appointment with me yet, then click on a link, set up an appointment with me, and let's just go over some of the stuff that you're thinking about. We'll talk and see what all you've got in store and what you would like to try to do as far as having a retirement income tax free or working with your business. Now, this financial plan is I'm working with helping with the most valuable asset, your money, and your ability to have an income. Here, Here is my license to be able to work as an insurance agent in the state of Tennessee and in the state of Kentucky. I'm working in quite a few areas, so I'm really busy. And uh, I have it where you can set up your own appointment on my calendar if you want to, or you can call me. Now, here's a picture of my family and uh, my wife. We're at their mother's grave. She had a brain cancer, but she didn't die until COVID-19. And we were part of the 48% who went into foreclosure because of the medical issues. We were both working, having a good life. Then the curveball of cancer hit us, and we lost the house. And this is a situation that a lot of people are finding themselves in sometimes in this day and age, especially with everything that's going on with the COVID and all that. But like I say, we were both working, and we had been paying on the house extra, trying to get the bills paid off. But my 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 task is to help you look for a plan that helps you keep your business, your house, or whatever going, um, in case you have a curveball. And there's other options that you can use. And this is me on the road. I was out and I had one of those accidents. It comes up ever so often. Now, this is uh, my my role and my purpose here is I'm your advocate. I work with you with about 30 different A-rated carriers working to design your IUL. And what the IUL means is it's an index universal life. And it's something that um, has been around for a while, and a lot of people are using it because of the preferential treatment that it gets from the tax code. And I'll explain that a little bit more later on. And what I'm going to do is I'm going to talk with you about details to help determine the best IUL details like your health, your mortgage, your finances. You have any business loans, anything like that? What type of retirement plans you have in place? You got a 401k, a IRA, or whatever. And even if you have a college savings fund for your children, and just to look at your asset bucket to see what type of assets you have, see what you want to plan for your retirement, see how you want to use the IUL, whether you want to use it for borrowing money against it, whether you want to use it just for retirement, whatever. But uh, this is, and I also want to help get you some type of IUL in place. What what are you looking for in your IUL program? Do you want it for the tax-free retirement? Do you want it for banking? And but you don't have to be left without life insurance, do you? We want a plan that you can keep for the long haul, for life's curveballs, don't we? You want to be able to keep your business going, take a vacation, but you don't want to be left without life insurance, do you? So let me just ask you, what life insurance do you have already? You know, if you've got some, we'll go over what type of life insurance you have and things like this. Now, I help about 15 to 20 companies a week. So my time is short. And uh, now the questions that I ask you when I'm talking to you on the phone, or if you fill out the form, set up an appointment with me, I'm not asking these questions to be nosy. I'm asking these questions so that we can work together to produce a program for you. Some of the questions I ask will be tough questions, but for you, and will be hard for me to ask. But I only do this to help prepare you for the future curveballs. And you can use life insurance for a lot of different in a lot of different ways, in a lot of different ways. Now, my job is to protect you as the business owner, to offer an alternative tax-free retirement without losses due to the market. And a lot of people like that. Now, not all business owners will begin to offer this as an alternative. However, many are seeing the value it brings. And I find some I find something to get a IUL program with interest growth, with a budget that you qualify for. And I can do this over Zoom. I can do it over the phone, or if you're out and about, as long as you have pretty good health and you know some things, some questions, you can answer a few questions. We can do it, while you're driving, almost. Well, no, not while you're driving, but now, what type of plans are in place if someone If a key person in your business passes away, do you want to grow? How would a check for 500K or $1 million help to keep the company going or to buy out a partner's share? Do you have a buy-sell agreement in force? This is what I help businesses do. Help them to be able to get uh, a check in case someone passes away. And it doesn't necessarily have to be just a key person. If you're a small company and everybody is important, you can have smaller policies on everybody. Now, what I do is I navigate down to the absolute best IUL option to protect your company and your team players. Once you pick out your plan, then I will help you fill out the application. I'll fill it out for you and your employees and submit it to the carrier of choice. And as your advocate, my main task is to make sure we get something in place to protect your business. I help get you qualified. It takes about 7 days sometimes. It depends on what type of policy. And uh, your part is to help guide me in a way so we can pick the option that fits your company's best interest. Now, like I said before, I'm an educator, and as you, have you ever heard the phrase strategic rollout before? Have you ever heard the phrase strategic rollout before? I can show you how a couple went from the highest tax bracket to zero taxes on 800K a year for taxes, and their family got millions tax free. Yes, this is what I call a strategic rollout. And I'll share a little bit more about that. A lot of people like that rollout, trying to get your asset from a tax uh, asset to a non-tax asset. Okay, these are some of the carriers that I use. Some of them's been in business for over 100 years, and um, they're A-rated companies that we work with. Yes, some lasted through the Depression, and there's one company that I work with that's been in business for 170 years. Okay, now let's move on into businesses. What are they using the IULs for their employees? You know, millions of dollars are lost in the IRAs and the 401Ks during 2008. Millions and billions in 2019 to 2020. How many retired folks do you know that are having to go back to work or who can't retire because of the loss in their 401Ks or their IRAs? Many businesses are moving to the 21st century and using the IUL as an avenue for an alternative retirement plan for their employees. And some of the smaller businesses are hopping on this idea and getting as much information as they can. Now, look at Mark Zuckerberg. Now, he lost $29 billion in net worth on Thursday as Meta Platforms Inc. FBO stock market a record plunge. It fell 26%, 26%, erasing more than 2 billion in the biggest ever single day market value wipeout for a US company. And it, If you've got 100,000, if you've got 1 million, sometimes people that have $1 million or whatever in their 401k or their IRA, it's gone down from 1 million down to 600,000. They've lost, and it takes them years to build it back up. It takes them years, 6 or 7 years to build it back up to 1 million, and all that money that they've saved and put in there is gone. And several years ago, a large mining company offered this alternative to a 401k plan. It was essentially a matching program for the employees who wanted to use it for a tax-free retirement plan. Businesses like to call it the Golden Glove Program. It helps keep valuable employees for the long haul. The person would put in $100 of after-tax money every month, and the company would match it plus 25%. Now, many businesses will take out a business IUL on essential employees to help cover the loss of a valuable team player, and they will get a lump sum check to use as working capital if, God forbid, the, the Lord calls them home. Now, they can also use the cash value to borrow against and use it to finance purchases they need instead of the bank. Some use it to add new locations. Yes, it, it's a life insurance policy. So you can use it, borrow money on your cash value or your surrender value. And then you can use it to buy whatever you need for your business. And a lot of people will use it for a cross buy. They will take out an insurance policy on an owner of the same type of business, the owner of another business, and if something happens that they die, they have the insurance policy on that other owner of the business. So they will get a check. They will take that check and buy that company with a sales agreement. There's a lot of things that businesses can do using this IUL, and I'll go over more later. Okay, now the American tax code has always had it where life insurance going to the beneficiary is not taxed. Now, what we're going to do is we're going to use in this index universal life, we're going to use your business is taking advantage of the IRS tax code of 101A. It's been in force for 108 years. We're going to take advantage of the tax code of 72E, and we're going to take advantage of the tax code 7702. Okay. And what that's basically saying is life insurance is tax-free when it is paid out to the beneficiary. And it also is saying that the growth in the IUL, when it grows in value, it is tax-free. And when you take it out to borrow against it, it's tax-free. So these three are covering all of the bases of making it tax-free. And the best part about this is what you're doing is you're overfunding a life insurance contract and you can pull out all the money tax-free if you do it right in retirement. So a lot of folks are liking this and are using this. It grows in value, like I say, in tax-free, and it provides a death benefit and provides tax-free retirement income. As I explained this, please think of it like a Roth IRA married to a life insurance policy. A Roth IRA married to a life insurance policy. There are no rules of Uncle Sam applying to this. No limits like 6K a year. You can put in 100K a year if you want to. No penalties for taking it out early. You know, it's you get access to it as long as you've got a surrender value in there or a cash value in there. And I took out some of the money from my life insurance policy to help fight my cancer. Now, this vehicle protects in 4 key areas for your business. All right. Now, there's 3 reasons why a 401k and IRAs are not a smart idea. When you retire, you will be in a higher tax bracket. Right now, you're working, you got a mortgage, you got car payments, you've got all these deductions, you may have children in the home, your business has these deductions. And when you retire, you don't have any of the deductions, and you're going to be bringing in maybe the same amount or more than what you did when you were working if you save right. So, and we know the taxes are going to go up. They may go up to 50% in for the higher income brackets. And with all of this um, spending that we're doing in the government, they've got to do something to pay for it with the spending and the national debt. And uh, you you defer a lump sum tax payment to your children plus estate taxes and state taxes with the 401k and the IRA. So it's you have to pay tax when you take money out, and then your children have to pay tax. And the 401k and the IRA, they will go through probate and be tied up, and it's accessible to creditors, Medicare, Medicaid, and exes. And dear old Uncle Sam, let's not forget Uncle Sam. He is in control, the controlling partner. You want to kick Uncle Sam out of your retirement planning. You don't want him messing with your income when you're retired. You want to get as much as you possibly can in your retirement into the bucket that's tax free. You can have some in your asset bucket that you pay taxes on, but you can have some in the bucket that doesn't even show up on the front page of your tax return. And the IRS, the government knows you're doing it, and they want you to do it because when you do set up for your stuff, that means when you set up your future where you're not dependent on the government, that means less money they have to pay. So they're willing to give you a tax break. Let me ask you this. What is the highest tax bracket the U.S. has ever had? Do you know? Well, it's right there. It's 90%. Yep, we did. When there was a war, the tax bracket was 90%. Now, in inflation, another thing with this 401k is the second one is inflation. Inflation will ruin it. And if you go through with your 401k or your IRA and you've had a big drop in in the stock market and your 401k goes from 500,000 to 200,000, you're going to have to cut your income or you're going to run out of money. And then when you count inflation, it will ruin it too. It goes along with the rule of 72. Inflation doubles. How much does it cost for you to do business today, right now? The inflation rate is at 7.5%. Well, it was when I made this recording. So how much is the cost of doing business gone up for you? And the expenses will double in 9.5 years with inflation at 7.5%. 5% inflation doubles every 15 years. And then, of course, the big thing that we're all concerned about is the 401k and the market volatility. I mean, you have seen a lot of people lose millions and billions in the market volatility in their 401ks, their IRAs. I mean, people are scrambling. Some of them are having to go back to work, and some of them are having to put off retiring. Now, why do you think the 401k and the IRAs are not a smart idea? Here, ask me about setting up a retirement income that you could pay zero tax on, possibly, or less tax on. I will show you a little later on a couple that went from the highest tax bracket to zero tax, and bringing in $800,000 a year off of their IULs with no tax. But they didn't have to take the $800,000 a year. They took less. Now, we can plan your retirement income. You want 50K a year, 150K a year, 250K a year, so that you pay zero tax, or a portion of what you have in your retirement is zero tax. Set up an appointment with me today. Don't wait. Click on my calendar link and set up an appointment. Now, protecting your business and your essential team players. 100% income tax-free death benefit that will come directly to your company if you have it on your key employees, or if you got a mechanic, or if you got a truck driver, if you got a dump truck driver, or if you got a worker, and you want to put a little bit of life insurance on each of them, because if something happens to them, you're going to have to scramble, find somebody to take their place or whatever. And you can have it where you will get a life insurance from something that happens to them if God calls them home. That way it'll help cover your expenses and everything. You never know when something's going to happen. And the death benefit goes directly, you can have it to where it goes directly to the company or the partner's spouse. If you have a partner in your business and you want to do a buy-sell agreement, you can use the life insurance company, and I'll show you an example of one a little bit later where you can have an insurance policy on both partners, And if one of the partners dies, then uh, you can use that life insurance part to buy out the other half, and it'll go directly to the spouse or to whoever, and it will be a tax-free death benefit for them. Now, that's a couple of the ways. And there's no capital gains tax at death. It's a death benefit. So you would get the death benefit with no capital gains tax. It would be tax free, and it all goes to the company, or like I say, you can split it with the employee's partner. Now, use it to help build your company or replace employees. You can use it to buy out a business partner spouse. You can put 100% portable. You can use it as a golden glove retention to help keep employees, or you can move it to another if they leave. So I mean, it's a no-brainer. It's a win-win for everybody, and you can use it for collateral for bank loans or borrow from the cash value or the surrender value, and use it as your savings account or working capital, and it grows interest. That's the best part about it, is it grows in interest, and it can grow in different levels of interest. So not only are you putting cash in there for your retirement savings, but it's growing as you put it in. Okay, what's going on? Okay, here's the story. Kate's husband, this is now Kate's husband. He passed away from an accident. She was devastated. Not only was she facing life without the love of her life, but now she would be a single mother raising 6 children. She was also left with wondering how she was going to make it because her hubby did not have any personal life insurance. Then she got the wonderful surprise. Now, Ken and his business partner had $1 million policy on each other. She got the money and decided to put it into uh, what I call a max fund IUL policy, so she never has to worry about money again, and she will not lose in the stock market. That is that is just what everybody is so excited about, is you're saving for retirement, it won't lose in the stock market, and it's gaining interest at the same time. Now, Warren Buffett, one of his number one rule is never lose uh, money. You can find this on the internet. And his number two rule is don't forget rule number one. Okay. And a 401k, an IRA, you can put money in there and you'll lose it. This is a great plan for business partners. When it goes directly to the widow or the spouse, they get the money tax free and have no capital gains tax on the money. Or what you can do is set it up where some goes to the company and some goes to the spouse. Businesses can also use this, like I say, for key person insurance policy and receive tax-free capital to build their business. Business can also use it as an alternative to the 401k. Doesn't One man used this max funded as a short-term loan to contractors. He borrowed money from his IUL to lend to contractors. This is another tax-free avenue. Thousands of savvy professionals use this for working capital and quit paying interest to the bank. Hank flips real estate, and not two or three small houses or anything like that. No, he flips it in large scale, like malls, apartment complexes, renovates them, sells them, makes a handsome profit, and moves on to the next one. And he borrows the money from his life insurance. Of course, when you're borrowing the money from the life insurance to do stuff like this, you've got to have the cash value, surrender value in there. But when you get it in there, you can use it for different things. Many people open a max funded IUL strictly for the retirement income that will grow tax free and is tax free at retirement. One tax accountant decided to go with the max funded IUL, and he took out two policies. Now, like I say, this protects you from the market risk. You never lose money. Average annual return. You have a cap and floor. Now, what do I mean by a cap and floor? Okay, let's move to the next slide. This is what I mean by a cap and floor. When you look at this graph and add taxes and ideas that the taxes have to go up, plus the idea that when you are retired, you lose a lot of deductions. So here, what happens with the cap and floor. Now, in 1998, if you put in $100,000, it would have grown to 136,000 somewhere in 1999 or 2000. And then what happened from about 2000 to 2002, we had this fall, a 57% fall. And that's where not only did they lose all the money that they had gained, they lost money from their $100,000 that they had put in. So it went down to 75. Now, 78,000. Now, here is the IUL. Look at this green bar, the green graph. As you start off, you get where you get to the 136,000, and then when it starts falling, instead of falling, it just goes level. Zero is your hero here. What it does is you have a cap and a floor. And what this floor means is you can either have a zero as a floor, and what that means is if it starts going down, you don't gain any interest, but you don't lose any interest. That's why, like I say before, and I'll say it again, that's why people love this IUL idea, is because you don't lose in the stock market. And here's another great idea. Look, you don't see when it starts going up. When it started going up in 2002, it started going up as soon as it started going up. It didn't wait till it got all the way up here. No, it didn't. As soon as it started going up, it started going up on the IUL, the annual monthly average index. So it just kept on going up. And then again in around 2007, we had another fall. We had made it up to $145,000, and then we had fallen back down to the original almost $100,000. So this is what's going on with the stock market. We just go 401k down, IRA goes down, and then we go up a little bit, and we've invested, some people may have invested more than they may have put in $200,000 or 250,000 right here. They may have had $250,000. Then they grew, and then it went back down. It went past what they had initially invested. So, and here's the floor again, where there's the loss in the stock market going down, but you don't lose. Zero is your hero. And then it starts going back up, and then it starts going back up, and it starts immediately going back up to where you have 198,725 in 2013. Okay, let's compare. Now, here's the difference between a 401k. I know I've said this before, but the death benefit account value minus taxes and the IUL enhanced death benefit. Market risk subject to market volatility, market growth or participation with downside protection. Taxes subject to tax rate, 100% tax free. Any safeguards not to outlive your money? None. But there are safeguards in the IUL to not outlive your money. Okay. And then what about Social Security and all its regulations? Well, you can't work any extra with Social Security. If you work extra, they'll take the money away from you if you make over so much. Well, the IUL is not connected to Social Security. It's a tax free. It doesn't show up on your front page of your tax return. It's not considered an income. And when we talk, I'll go into that a little bit more. But let's just keep moving here. Now, what I want you to do is when you have a chance, watch the 401k Fallout on 60 Minutes on YouTube and do a Google search for 401k failure or 401k. Now here's an article from Time Magazine in October of 2009. The ugly truth, though, is that the 401k is a lousy idea, a financial flop, a rotten repository for our retirement reserves. In the past 2 years, that has become all too clear. From the end of 2007 to the end of 2009, the average 401k balance fell 31%, according to Fidelity. And you can go online and find this. Why is it time to retire the 401k? Like I say, it helps protect against taxes. Taxes are going up or down. Are you supplementing your income, the retirement income with the tax-free income? Trade off between death benefit and tax-free income. Give yourself a loan from the death benefit bag into your wallet. And the IUL is funded with post-tax dollars, not pre-tax dollars. Pull out the money tax-free. You can have 32K, 52K, 66, whatever you want. I mean, it depends on how you want to set it up. 100K, 150K, all tax-free when you do it right in the retirement. Each person is different. You can also put in $500 a month, $1,000 a month, depending on where you are with your business. Or you can put in $10,000 a month for what, 5 years or whatever. You can put in over $100,000 in it in a given time period. We can set it up however you want. So how much do you think the taxes will go up by the time you retire? I took some out of my 401k, like I say, to help with my cancer, and it cost me 20% in taxes. Thank God I was over 59 and a half, or I would have had to pay a 10% penalty. Sorry about that. My brain is a little discombobulated sometime with my cancer treatment and all. All right, now this is what I wanted. This is the lady that I was talking to you about. Her, well, a couple. They had like a couple of different IRAs, 401ks, and in talking with them, they decided that they wanted to bite the bullet and do a strategic rollout from their tax deferred IRAs, 401ks. So they gradually moved all of their money in the IRA, 401k, or whatever over into a tax favored I index UL. And it grew to $8,022,682. And they would have had 3 million in the tax deferred, or 5 million. They would have had 5 million in their tax deferred IRA or 401k. But with the way the indexed ULs are set up, this is the interest that it grew. And I guess between the tax deferred and all that, with the losses in stock market and all that, well, anyway, so they had to pay out $1 million and something in taxes while they were in, well, they would be in retirement. And also, if they left a balance of $2 million, then their family would have to come up with or deduct taxes out of this. And not only that, but this would be subject to creditors and to court exes, whoever. But this over here, it's zero taxes. This is when I was telling you about that got $800,000 a year. They could take out $800,000 a year tax free. I mean, can you believe that? $800,000 a year tax free for the rest of your life while you're in retirement. And then the balance goes to your children or to your beneficiary tax free. It helps protect against you outliving your retirement income. It's got the safeguards built in, and and the client or the beneficiary will always get more money out of the IUL than they ever put in. Money is safe from the fall of the stock market. Okay, now here's the type of businesses that use this. All types of business. Uh, company owns, company pays. They get a death benefit, cash value asset with access anytime, used for retirement, death benefit, tax free, used to build company, it collateral for banks, retirement for essential employees, employee retention, no 10% penalty, cap and floor, death benefit grows, employee transferable. Now, here's a list of some of the small business, large companies, self-employed, contract workers, truckers, over the road owner operators, mechanic shops, salon owners, restaurant owners, realtors, real estate investors, etc. Anyone. It's a retirement plan for employees that companies match deposit if they want to. Now, what type of business do you have? How many employees do you have? Would you consider offering an IUL retirement option to your employees? Have you lost any money in your 401k? Would you like to avoid that and move your funds into an IUL like a lot of folks do? Okay. Now, I work with a lot of businesses. I optimize a plan over Zoom That way I can help more people. I will come to a business in Tennessee if it is close by me or if they have a minimum of 20 employees, or if you help me set up another business close by to equal 20 employees. I will need a place to stay if I need to stay overnight. Don't wait. Set up your appointment early. Call or text me with your request, and that is my direct cell phone number, 615-319-4139. And you can pause it right here if you want to and get that number and text me. And then I will set up a time I will call you and work up a time. Get your key person insurance and keep your business going, or buy out a partner. Use this for a buy-sell agreement. Now, the the owner of McDonald's used this idea to help spread the McDonald's franchise and to help promote the Ronald McDonald campaign. A lot of businesses have used this, like banks use it, credit unions use it, Apple has used it, McDonald's, J.C. Penney's, Senator John McCain. Senator John McCain used it for his campaign. Walt Disney, David Walker, Wonka Flonka, Pampered Chef, Foster Farms. There's these new policies have some riders and ways that you can gain as much as 40% gain in them in the first year over the old whole life policy. All the financial gurus don't know what they don't know. Now, here, this is a small example. A 28-year-old non-smoker puts in $150 a month, $38 a week, okay? And that's 148,923 death policy. So the first year he pays $1,800. He paid $1,800 in. He's got $1,316 in cash value. So the life insurance that he pays for is $484 for the year. In his 10th year, he's paid in $18,000. He's paid. His cash value is 17,691 cash value. It's cost him $309 for the life insurance. Now, on the 20th year, he's paid in 36,000, but his cash value is $49,497. And he's got a positive of $13,497. And if he wants to, he can use this money for helping to buy a car. He can use it as a down payment on a house. He can use it for medical expenses. $1 goes toward life insurance and his retirement program, cash value. His stats are 27% to the insurance policy, 73% the cash value or retirement, not guaranteed. It just keeps growing more and more every year. He has a life insurance policy plus a tax-free retirement plan safe from the falls of the stock market. Now, here's some negatives. Here's some negatives about the program that some of the gurus, the financial gurus like uh, Dave Ramsey, Susie Orman have about this. And it says you overfund it. Well, yeah, you do overfund it. This is to build for a tax-free retirement. And they say, well, you should buy term insurance and invest the difference. Well, I don't know, but I heard the other day where there's one lady is paying $338 a month for a term policy, and it's for 20 years. Well, if you figure up $338 a month for 20 years, and it's going to end in 20 years. If you don't use it in that 20 years, you've lost all that money. And that's part you can that's part of um, the rule. Don't lose any money. But and over the 20 years, that's what, $66,000. Whereas if you took that $66,000 that you're paying in and you built your IUL right and you kept paying that in, you would have a pretty good retirement built up. And at the end of the 20 years, if you've had any health insurance or health problems, that insurance is still going because it's an index universal life. It's for your whole life. It doesn't end. So you don't have to buy more insurance at a higher price, or you may not even be able to get insurance because of health issues. And you, they don't like it because you have to pay interest on your money, dividends, and comp interest. It keeps growing. And I can go over these a little more if you want to. I just want to give you an overview of this so that when we talk on the phone, it doesn't take so long. I can start showing you. I don't have to educate you about this. I can start showing you what the possibilities are, um, put in and put out illustrations of what the possibilities are. And some call it maneuver. Well, if it isn't designed right and if you don't keep up, it is manure. But and another one is it could turn into a mech. Yeah, it could turn into a mech. But like I said before, there's safeguards in there to prevent this. And you want to help prevent this. It could lapse on you. Yeah, all premiums, if you don't pay them, they can lapse on you. And if it lapses on you and it's expensive, but you're getting two birds with $1. You're getting a death benefit and a retirement. And depending on how, like the fella, 27% was going through the insurance, and about 75 or whatever was going toward, and the company pays into gross cash value, helps keep the 7702 IRS in force where it's tax free and it's high commission. Well, that depends on how it's designed. But let me ask you this. I understand where Dave Ramsey and Susie Orman are coming from. I mean, they have a niche that they're working with. Dave Ramsey's niche, and they're wanting to help get you to where you're debt free. That's their niche. But they don't know and understand what the life insurance is and what you can do with the life insurance. And besides, let me ask you two questions. One, do they do all their help and their consultation with their people for no charge? No. I mean, if you go through Franklin, Tennessee, you can see Dave Ramsey's building. I mean, you should see that building. It's multi-level. It's it's yeah. hmm He charges. So I mean, and if I could set up a plan where I could save you money in your retirement, where you could get 75,000, 32,000, 50,000, 100,000. If I could help you set up a plan where you could get $100,000 in your retirement tax free for the rest of your life, plus your beneficiaries would get a lump sum amount that they would not have to pay taxes on, that they would get quickly, would not have to go through probate, would not be subjected to a lot of the creditors and to X's and to all those other things that have and not go through the probate, like I say. Would you be willing to give me a little bit of a commission to help set that up? No, I wouldn't mind giving. I mean, I've had I've worked with people with cancer for a long time, and when some of them call me, they don't mind, because if I know some information and I can help you set something up, it's a no-brainer. And like I say, Dave Ramsey and Susie Orman, they do not really understand the mechanical workings of life insurance. When so many people and companies and banks use it, most financial advisors don't comprehend how to work with the life insurance, so they can. So how can Dave and Susie? Okay, now, okay, let's go on. Death benefit, cash value. Yeah, some if it's created right, yeah. Okay. Ask us about hooking you up. Now, uh here, these are some articles on people that know what they're talking about and talk about using the life insurance. Okay. Forbes article, April 27, 2017. Many people do not view life insurance as an essential and vital part of a retirement income plan, but they should. They should, because life insurance is the only avenue, the only asset bucket you can have that is tax free. And Russ, a certified financial planner with a PhD, he's in financial and retirement planning. He notes that there are tremendous uses of life insurance in a retirement income plan because of the preferential tax treatment that life insurance receives. And this has been known. Now, this next slide is going to blow you away. I mean, it's going to blow you away. Okay, look at this. Bank of America, 19,607,000,000. They've got it in the bank-owned life insurance programs where they buy life insurance. They've got 19, they had 19. In 2019, they had 22 billion. Wells Fargo Bank, they've got 18 billion in the bank owned. JP Morgan Chase, 11 billion. US Bank, 5 billion. 2019, 3,800 banks owned 190 billion in life insurance. And why? Why would a bank? Because what they do is they can access it anytime. They get paid interest on it, and they'll take money out of their life insurance policy. What they do is they take your money that they're giving you 1% on when you've got it in the savings account. They'll put it in a life insurance policy. They'll take it out of that life insurance policy. They'll loan it out to somebody else, charging 6 or 7% interest, 3, 4, 5, 6 or 7% interest. So there's no lost opportunity cost. And if they're handling their life insurance right, they're making more interest off of their loan, their money that's in the life insurance, than they're paying interest, and it's just, this is how money works. This is why the rich people use the IULs, the whole life insurance. And why aren't other people doing it? Well, because a lot of folks don't know about it. And that's what I'm doing. I'm out here trying to educate people. And now look here, over 2 billion of cash went into IULs from people, business owners, and others just like you in 2019 alone. With this being the case, do you think the advice from some of these gurus are giving is good or questionable? You think they don't know what they don't know? Let me get a drink of water. Now, here's another one that's going to blow you away. Would you like to see it? Here's a few companies. Here's the companies that, and I won't read over all of these. You can pause the video and look at some of these if you want to. General Electric, AT&T, Nestle, General Motors, Pfizer, International Paper, Outback Steakhouse. A lot of these, Avon, Comcast, Verizon, Starbucks, Amway, Panera Bread. If these companies will use this type of program, I mean, then do you think it's safe for you to use this type of program as a small business? Do you see the value in this type of program for your company, for your employees? Now, what can the business use this cash value for? Whatever you want. Keeping money coming in, buying business equipment, buying a car, medical expenses, paying off debt, company autos, buy out other businesses, expand your business, donate to charity, pay out bonuses, buy a big rig truck, start new location for emergency business expenses, planning for college, planning on children, helping family, take time off work, whatever you desire. You can use this tax-free and penalty-free. Now look, here is, we're going to call this fella Bob. He's working on a plan to pay off his business loan early on the business property and putting an extra money in and into the principal payment. One day, Bob goes to see a doctor and he finds out he has medical problem, or it is a wreck and cannot work for a while. His business kind of suffers and gets behind on his business loan. He has paid in a lot to bring the principal amount down. So he has built up a lot of equity and now is low on funds and the bank loves it. Now, only have not only have they made money on the interest, they have all the extra cash Bob has paid in, and they foreclose on the business property and take it and have a huge profit. Then they sell the building or sell the property at the current market value or close to it. Now, who is the winner here? What a lot of companies are doing, these smaller companies are doing, is instead of paying off a loan and making higher payments on a loan or whatever, they're putting that money, and so are individuals, they're putting that money that they're paying extra on into an IUL, building the cash value and using it, and then keep paying, and then eventually they'll have so much money in their cash value that they can pay off their business in one lump sum. But I would do it. What I would do is keep putting that money into retirement, letting it grow and build that cash value, and then just keep paying the payments through the business for the business. Now, how does the work, how does uh, how to use your IUL as your own bank? Okay, you've got your IUL policy, and what you do is you borrow money and you put it in a separate checking account. It's a good idea to put it in a separate checking account. That way you can keep it separate on your books to where you know what's going on. You can have it in a separate one so it doesn't get taxed. You're paying it back, paying off that insurance policy, and then what you can do, you can pay off any debt you want to using the cash value, and then what you do is you pay it back to the separate checking account, and then you put it back into your insurance policy, pay the carrier without threat of foreclosure or uh, repossession. So what you can do is if something happens that you've got a lean month or you've got a lean year and you're not making the money that you expect to make, if you've put all this money into this uh, index universal life, and you've got what some companies will do is they'll put $100,000 in, or 10,500 or $1,000 a month, and put all that money in the first year and build up that cash value that first year. And then they can either go lower on what they're putting in, or they can keep it the same for a certain length of time and build up that cash value fast, or they can take it over time. It depends on what you want to do. And what I do is I talk to you, I figure out what you want to do, what you want to use it for, and if you want your employees to be able to have this option, to have the IUL option, the tax-free without the loss of money and connected to the stock market, each person will be different. I will sit down with each one over Zoom or in person, and we'll come up with a plan for them where they can set up their IUL for a tax-free retirement. Now, John D. Rockefeller started his family on this family banking system, and it's still being used today. When he started building it in 1917, okay, 6 generations later, they are still using the family banking idea. And this is on page 4 of the book. What would the Rockefellers do? What would the Rockefellers do? Okay. And this is a great book. It talks about how How do you set up a family bank where it grows and it keeps growing and it's not depleted? Because what you do is the family can take money from the family bank, but to borrow money from the family bank, but what they do is they pay it back, and it just keeps growing and it just keeps growing. Unlike the Vanderbilts, what they did was they didn't start the family bank. They didn't use the whole life or the IUL as their own bank when when the Vanderbilts died. It just all went to their children in one lump sum, and it was gone. It eventually it was gone. Now, uh, yeah, one family, they used their money that they got. They borrowed some from their life insurance and bought one of these for about 6 figures and traveled around America. You can buy or use whatever money you got in there for whatever you want. All right. Now here's the S&P IUL, 8%. You see the difference between, well, they had 150,000 and they lost money in '02, and we had that zero is your hero right there, and then it gained money, and then you got that zero is your hero again while it was falling down in 2008, and then you got that uh, rise up again, and then you got the zero is your hero, then you got this going up, 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 and the zero is your heel, and you got it built up to 585,986. Now here's a slide about the taxes. $1 trillion for debt. That's a picture of $1 trillion. And here's $15 trillion right there. $115 trillion. That's a lot. That's a lot of money. Now, here's asset growth and taxes. You got three buckets, three types of money. You got your taxable account bucket, you got your tax deferred account, and you got your tax free account. And my uh, my thing is to help you get as much into this tax free account as you can, so that when you retire, you get your income tax free, and so you don't lose a lot. And we all know taxes have to go up to cover the national debt, right? And to cover expenses. Uh, would you rather pay no taxes or some retirement income to help keep your tax bill low? Me personally, I would rather pay no taxes on all of my income. But sometimes that's not that we can't work that out. But do you like the idea of having access to your money anytime with no 10% penalty plus taxes? Okay, now is here's my phone number, 619-3935. You can call me or text me on that phone number, and let me know. We can set up a Zoom meeting if you want to start with just you as a business owner or a business partner. We can just start with just you, as the business owner or business partner, and then move on and work with some of the employees. But you can also click on my calendar link and set up a appointment that is a good time for you, and we can go from there. Now, if you want to, you can pause it right here and get the phone number. That's one of my phone numbers, my office phone number. Now, I'm going to stop sharing my screen. Okay. Well, I hope that this was educational for you, and um, I hope that we can work together. Give me a call, or like I say, click on the link and set up a time where we can talk. And usually the process, it depends. You know, sometimes I talk with one fella, and I talked with him one time, and he told me, he said, you had me when it was not connected to the stock market, and it's income tax free with a tax free retirement. Let's get this done. Let's do it right now. I said, okay, let's do it right now. But sometimes, you know, uh, it might take a little bit longer. And of course, now remember, this is a life insurance policy. So sometimes people will not qualify for this depending on their health issues. I can't get it because I've had cancer before, and I'm dealing with cancer now. So there are some medical issues that will hinder people from getting this. That's why what I recommend is I recommend for people to get on this type of program as quickly as they can and not wait, because I've seen instances where people well, I like it, I want it, but I want to think about it a little bit. I want to talk to so and so. I want to do this, I want to do that. And then, you know, from the time that we talked to the time that we rescheduled to meet again, they've had a curveball that has been thrown at them by Murphy. And they have passed away, or they've had an accident and they're gone, and they don't have it in place. So what I like to do is I put out this video for people to be able to look at this video. They can make an educational decision by watching this video. And when they set up an appointment with me, I can get some information about their health and what all they want to try to do, and get some information about, how they want to pay for it and all this stuff, and whether they want to have it on themselves and pay personally, or if they want to have the business pay for it. And then, you know all that stuff, all the paperwork, and um whatever they want to do. And I can set it up, I can figure it out with different, I can figure out if how they want to have it. They wanted it for retirement, they want to have it for a bank, they want to put $100,000 in a year, they want to put $500 a month in, they want to put 50,000, they want to put one uh, lump sum, they want to roll out their money in their 401k, they want to do a 1035 exchange. What do they want to do? Do they want to try to get as much in the tax-free bucket as they can right now before they retire, and let it start building money, or what? And this is This is what I'm here for. I mean, I help as many businesses. I work with businesses. I work with individuals, couples, whoever is interested in this. And you can share this video. You can share this video with your employees. And if they want to do this, even though you're not using it or not offering it to your employees, they can. But what I would do if I was a business owner, this is a benefit to your employees that you can offer that not a lot of businesses are offering. And you can offer it to them. You don't necessarily have to pay a portion. You can just offer it to them as a retirement alternative, and they can choose to do it if they want to. Okay. Now, like I say, if you want, click on the link for my calendar and set up a time that we can meet, and we'll see what we can do. Help you get yourself into uh, a tax-free retirement program that you can use to help your business and grow your business and use it as a expense account. All right. Well, I will talk to you later, and I appreciate you listening and or watching the whole video. I know it's been long, but it's an educational thing that when you come to me, you will know a lot about what this is, and we can move forward. And if you want, I can send you a video of a person that I'm working with that has been doing this for a long time, a long time. All right, I'll say goodbye. Have a blessed day, and I will talk to you later. Bye.